Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly here. Is it? Nope. There we go. Now it is. Alright. Now we're working correctly here. Good morning, good morning. Welcome, welcome. Hopefully everyone was able to rest up, get ready for the day ahead and all that fun stuff. Of course, as always, before we jump on in and take a look at everything and all that fun stuff, on the right side of the screen, very important to go through the morning prep PDF and understand everything that is inside there. So make sure to read through that. Just a quick note for you all as well before we jump on in. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. I just want to take a second as well, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education or career. The easiest way to start out is to join as a member on YouTube. You can join and that gets you in the chat room and a little bit more behind the scenes and what's going on. Or if you want more information on how we do everything and our trading approach with over 20 hours of video course material and a ton more, swing over to the main page at ssftg.com. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside me today, analyzing these crazy markets of ours. All right. Hopefully everyone is doing well so far this morning. Good morning, good morning. Don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. Nasdaq, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. They're all waiting there for you. As far as the news is concerned, man, there's not a whole lot going on. The news is relatively light, but we did have some news at 8:30 with the initial jobless claims. I mean, realistically, with everything that's going on, right, I think there's just a bigger impact from the fact that FOMC was yesterday more than anything else. So it's, as far as the news is concerned, I mean, yeah, there's not a whole lot, but the markets have definitely moved quite a bit over the last 24 hours or so. So let's jump in, take a look at some charts here and see what's going on. From the Nasdaq perspective, I'm out on the 60-minute chart because, again, what we've been talking about for a while here is this rising bull channel that the market has been trying to break underneath and then failed back above. And we were looking for the inside retest. That worked out beautifully. Now we've got a continuation back to the upside, which has succeeded in reaching out to those objectives higher. Now, with those 3-to-1 targets and all of that fun stuff getting taken out, that doesn't necessarily mean it's game over and the trend is done. But it does mean that we'll probably see a little bit of a pause. If we're looking at the overall structure, it does seem like we're at around about an ABCD move back. And that's also a pretty likely area to find some stalling right at the previous swing. There's a lot of things that that would be, suggesting that the market should pause for a little bit here. Now, from the 15-minute perspective, if we zoom in a little bit closer here, from the bottom, this cycle higher has now ground its way up a little bit further to the point where we've got a lower cycle that started off of an L4. After that L4, we broke up into an L1, and it did hold. It worked. It did it in a really funky way, but it worked. The next continuation up was another L1. So the fact that we're breaking higher, we've technically already kind of had 2 L1s. We're already inside of the third, looking for a potential continuation to the upside here. So, I mean, the bulls have a shot on the 15-minute chart to try to creep this higher. It's just, it's hard to not look back and say, well, wait a minute, the last confirmed swing was way the heck up here. As far as a trend reversal is concerned, it's got a minute. It's not going to hit that for a little while. Same goes for the S&P. I mean, we do have that potential reversal going on back in the opposite direction off of an L4. When it rolled up to a new high, it hit an L1, popped up into another L1, and now we're popping into another L1. This is the area where bulls are expected to show support for the continuation, but, here again, we still... stop. We still have the previous confirmed swing way up here. So, I mean, we're miles away from a confirmed swing flip. So far, at least. Looking at the S&P and the larger perspective from the top down, if we were to just take this spike into account and look at it, bug data, hang on. Okay, there we go. So here we have the POC, which is beginning to get bottom weighted, and the market is trying to churn above it. When it comes back, we get a little bit of a pullback down to it, bounces off it for just a second, chops through it again, pulls back up, chops through it again, and tries to figure out what it wants to do in terms of a downside move, which ended up being an avalanche wedge and a reversal failure. And now we're kind of churning our way back up. If we look at this as an overall POC from left to right on the highest point up here, I'll wait for it to finish calculating. There we go. And we creep this all the way forward. Okay, now it actually moved inside of there. There was the POC, which was down here, and then it kind of shifted up. But either way, I mean, we're breaking above the POC, right? I mean, if the bulls are going to try to take it, that's the kind of stuff that they need to see. I've just got some really big concerns for where it is now. Tough to want to be a buyer way the heck up here. Over on gold, gold is getting absolutely decimated to the downside, which is fantastic because we were looking for the shorts on the downside for quite a while here. We do have that roll over, and it's been just whacked almost all the way down to the lows. As far as the continuation down goes, the immediate reversal was off of the L3, which dropped lower into the L1 cycle, and they're trying to continue back down. Now, with the break of the L1 cycle, the next one up in that continuation is obviously going to be an L2, but they had that quick little peek back up to re-grab a repetitious L3 from what they did before, and then reversed all the way back down. Good old news to fire things off. Now, after that reverse down, which we can kind of zoom in on a little bit closer now, we can see that realistically the follow-through has been immense. If we go from the bottom to the top, bug data, really? Right there? That sucks. Hopefully it doesn't change anything. Okay, good. So we've got the POC, which is back here at 1774. And after the market tried to rally back up, bulls would have likely gotten in thinking, hey, this thing's ready to go. Just to get annihilated. And after it rolls back down, it allows them a chance to get out at break even here. And now we've come back again here, here, and here. And after all of those opportunities to get out of the bulls break even, it seems like they've finally fully gotten out. So much so that we're actually creating a landslide move to the downside to churn this back lower. Possibility of, maybe an ABCD move, something along these lines. Still kind of far away from it yet, but we're around a 618 at least. From a structural perspective, we've got the last cycle, which came off of an L3. So the next pullback is likely still going to be aggressive and more along the lines of L1. There's a lot of things that stack up here. Over on crude oil, more continuation now to the upside after viciously trapping the lows down there at, on the 21st. Jeez. Right underneath the $70 mark and rotated back up. If we're going across from the top down to the bottom, as well as the bottom up to the top, we'll notice that there are bug data. Man, that drives me nuts. There are a couple things that stand out. First off, we have a top-weighted POC, and given that the market was aggressively rallying higher, I have one assumption. How's it going, Steven? My assumption would simply be that the bulls were looking to buy in for a continuation up, and you can see the shelf that they were working with until it got steamrolled. And once they got rolled over, now we're starting to break back underneath that point, breaking down to a heavy, heavy low. And remember, one of the things that I love looking for, those confirmed swing traps. Oh, that's so nice. Those double confirmed swing traps, man, those are nice. Bounced right off of that area. How's it going, Shlomo? With a continuation back up, so aggressively so that we have a full flip. It's just total reversal off the bottom. Gone. So with this continuation higher, obviously in the cycle, we've got this, kind of L2, L1, L1, L1 phasing, big blow-off move. Where did it pull back to? They pull back to L3. And L3, rotating back to the upside now, if the bulls were stuck up in the ones, trying to get that L1 continuation, this is their chance to get out at break even. Same thing that we just saw in gold, except gold got annihilated. Now, after the sellers have tried to rotate down, we're back again. And that would effectively, if you look at it, they kind of churned above it a little bit, disproving the sellers, and if they were trying to get out at break evens, that gave them a chance to get out for a little bit. Pulls back underneath it, drives down, pulls back again. This is the launching pad. Either the sellers smash this from here with incredibly low risk, massive reward, very low probability, or we see this break through the top and we get a continuation back above 73s. It's looking a bit stronger for the continuation side of things, but, the overall cycling from the low, if we zoom out a little further to a 60-minute here, the all-important swing that we have to break to disprove this bear trend is still up in the mid-73s, upper 73s. Hasn't broken yet. So, bear trend still persists until that breaks. They've got a pretty good shot, though. Looking good. If they can't get that job done, though, this thing's going to collapse all the way down below 60. So, they better hope it works. Gold rebounding a little bit. Over on Euro, excess continuation to the downside and still kind of working its way lower. The trend is kind of grindy and similar to what we saw on gold with the trap above the highs, rotation back to the lows, blah, blah, blah. As far as the overall move is concerned, from the top all the way over to the bottom, that might take a minute. And the wider channel that we were talking about before. We have a POC which is lined up at 1.18390. The last time the market was there was on this last, assumably, pullback at the time. So the assumption would be that these were bulls trying to get this going and they got hammered, right? Absolute dumpster fest. So with that move, what do we have? We've got stuck longs. Well, if they're stuck longs, what do they want to do? Well, they want to get out at break even. Unless it goes flying above their break evens, then they'll try to stay in for a little bit. Unless it falls back underneath, and then they'll get out of break even. So really, right now the longs are stuck. They're underwater. They've had a chance to build in, and obviously there's probably going to be a POC shift sooner than later down here. So if we do get a POC shift hovering around this area, the upside objective becomes the 8390s. If it doesn't POC shift, then this becomes a major wall of resistance. It's still a zone of resistance if the POC shifts, but it's less of one. Because that would signify that they've done so much averaging that they've brought their average to the lows. Now, where we are on this rotation to the upside, we're coming off of a double overshoot on the lows of a channel, and that channel could also be drawn a little bit more aggressively, something like this, which has a break and a continuation down. Could be looking for a second leg, but either way, when the market decides to begin correcting in its upward phase, that's a beautiful upside objective to try to gun for. Is it going to be today? Probably not. It's a positive 2 DP. It'd actually be like a positive 3 to get up that far, maybe 2.5 or so. That's a big way up. Can it make it there? Definitely. But will it? It might take some time. We'll see. All right, over on Bitcoin, we've got that big flushy dump on the low and one of the most obvious avalanche wedges that I think we've seen in a while. We've been talking about it for a minute now, but we've got the break and the continuation. This is the shot for the bulls to take it. If the bulls are going to take it, even if they do pull back, so long as they don't break the low, they're good. Right? So as long as we don't get back underneath 39,500, the bulls have the short term and we'll be back up towards the highs again. Or at least of the short term highs back up towards like maybe the, let's be conservative, 47s. Even though 49s is the upward momentum area. If it does want to pull back, we have the actual cross of the avalanche wedge, which is right over here. And typically that corrective phase should go until about that crossing distance. So we've got a little bit of time yet. Probably won't kick off until around 6:30, of course. Well, better frickin' time, right? So later this afternoon on Bitcoin could get a little bit more interesting, but for right now it's kind of stalling out. Same goes for Ethereum. We've got a not so much an avalanche wedge as much as just a kind of a reverse megaphone. I don't know what you want to call that. Either way, we've got a major blow off, and now we're starting to reverse back above these previous swings. Ethereum, I gotta say, doesn't seem as strong. Structurally, at least. We'll see. All right. You'll notice there is a slightly different layout. One thing that I noticed was that when we're dealing with these slower markets or slower time frames or looking for a few less opportunities, that opens the door for us to be able to focus on a lot more markets. So with that mentality, we have the 5-minute chart on all of the ones that we just talked about, the Nasdaq, S&P, gold, crude, euro. I will still be focusing quite a bit more on the Nasdaq and the S&P, but that said, there will still potentially be more setup opportunities going on with the others, gold, crude, euro. So we'll keep an eye on things. We'll see what they want to do. What the heck? Hang on a second. Every time I try to save this as default, it doesn't work. So how about default... Will it work this time? Hey, there we go. I don't want it zoomed out that far, though. That's crazy. Those are some thick candles. Let's get about that. That looks good. This looks like it's not auto-scaling properly, but it is. All right, that's fine. Let's save this over that. Hey, there we go. I don't know what the heck was going on there, but my template, every time I tried to save it as default, it wouldn't work properly. Or the moving averages would get messed up. See, those aren't the right ones. Even though I've already saved them, whatever. I'll just use this. Well, they all say CL now. Well, good thing we got 10 minutes, I guess. Dang it! So, this is something that will happen for those of you who are trying to organize your workspaces. The name at the bottom. What I like having this say is the name of the market and the time frame. So if I want to change that, I can right-click on it and go to Rename, and then I can modify it from there. And what I want this to say is, instead of any words in there, I want it to say at period, at instrument. And when I do that, it'll show me 5-minute Nasdaq. So let me go back and save over this again. And because we did it at instrument, at time, all of that, when we go over here and we go in and load this template up, it'll modify to the 5-minute ES. It automatically updates to the appropriate market because of the programming. It's kind of nice. Hey, how's it going? I have no idea what that said. But I'm going to be 100% with you. So far, so good. Market is churning its way a little bit lower. Now, as far as the wider perspective goes, I mean, again, this is a very, very big zone of interest. Monster of a trap zone here. Major trend. I mean, this is everything. It's a big spot. Yeah, it's all good. Market just kind of hovering around, not really doing a ton, but trying to get something going. Now, from a corrective phase that we've got going on here on the markets with this pullback, we have to ask ourselves: does it qualify as a corrective phase? You know, how does this fit? And really, we've got 1, 2, 3, 4, 5. We know it's a corrective phase because those, well, they break the impulse rules. So from the bulls' perspective, we're kind of at the fifth wave completion. As far as timing is concerned, this is a really good timing for bulls to try to look for longs. All right, well, here the market sits so far. Now, looking at it on a slightly quicker time frame, right? If we were to bump this over to, let's say, a 500 tick on the Nasdaq, just to kind of see what's going on internally, we can see that there really hasn't been a whole lot of movement, to be fair. It's been kind of quiet. Big jump to the upside there with kind of a parabolic overflush, but really not much has happened since then. We kind of put in a little bit of a high that tried getting a bear trend down. It worked for a break, and that's it. Reverse back up to a bull trend. We have a break, massive continuation, and then started reversing back to the downside. I mean, it hasn't really... We're going to be opening up basically right where we closed. POC is kind of back in the middle. I don't know, we'll see. But, I mean, right now it's not really doing a whole lot. On the S&P, 2,000 tick. Even less. Got what, the bull cycle up, which that's not exactly the prettiest thing in the world. Gross. Now we've got another kind of gross looking bear cycle in the opposite side of things. Basically just in a range. As far as the S&P is concerned, from the bottom to the top, POC's probably in the middle. Yep. To the tick where it topped out on that next move. And then rotated down again. Let's see here. All right, and the last one they left behind is back at 406 or so. We'll see. Oh, and just as a heads up, we've got another really wicked storm going on here. So if I disappear, you know what happened. The S&P does have some short-term resistance at 475, but we have 4 minutes until the open. So gold got crushed. Nasdaq churning down, I'm sorry, not Nasdaq, gold churning down incredibly aggressively on that last drive lower. It's a total flip of the last move. I mean, everything that, jeez, it's not the first time it's happened, huh? Obviously, that was on the news yesterday with FOMC, but since the FOMC has taken place, we've had the first pullback, which is an L2. They broke down to a new low. The next pullback was an L1. After that, it rolled all the way back up to an L3 and then drove back down again. After an L3, you expect an L1, which so far it hasn't hit yet. So we do have a reason to believe the L1s are going to be the follow-through. Let's move this over here so I can actually see it, though. And then the last one was an L3. That's not what I clicked at all, but sure. All right. Potential swing interest short for gold to see if they want to rotate to the downside. Aside from that, there's not really much else. Crude oil reversing off the lows on the near term with an L5 and then quickly flipping back up. Look at that quick little trap on that 5-minute too. Wow. After an L5, usually expecting something a bit deeper, and we haven't had that yet, so. One minute until the open, right around the corner. As far as crude oil is concerned, we have support a little bit further down in the 72s. Otherwise, it's not quite there yet. The euro's just churning right now. Gross. $15 seconds until the open. Right around the corner. $9:30 open hits, I think. Is everybody awake? Jeez. What a slow start. I barely did anything. Nice attempted bear continuation to the downside on both the Nasdaq and the S&P, but wow, reversing right back up with a pretty vicious bull bar. It's a bit of a challenge. Alright, sellers kind of trying to put the pressure on again. We look back at the last move, it's still down at 15,210, so it's, sellers aren't exactly having the easiest time in the world here, but more continuation up on crude oil. Oh, wow, that's fancy. $15,210 just kind of hovering. Sellers gaining a bit more traction here on the Nasdaq, though. The S&P not showing that, but the Nasdaq's gaining some traction to the downside. If the bulls are going to take it back, they've got to shut this down. That was a pretty good shutdown right there. Wow, that flipped right back up again. What a POC from the top there. It's just fantastic. The Nasdaq still looks like it's got some issues here. Gold still forming, massive POC down at the bottom. Nasdaq gaining a bit of traction now, sliding back lower. That's not what the bulls want to see. That's going to freak them out a little bit. Market continuing down with a little bit more bearish pressure. The Nasdaq definitely showing a lot more pressure than the S&P is. Wow. I'd love to see one more pulse up on the Nasdaq here. This is forcing sellers to sell really, really far down. Although it looks like sellers are still really trying to put the pressure on here. Gold has a huge bottom-weighted POC at 1754.8. Crude oil now moving up with an L2 hovering at 72.30 with a POC right in the middle of that too. Wow. Still just kind of fiddling around, not really doing a whole lot of anything. Big bear engulfing. Excuse me, bear engulfing on the Nasdaq. S&P has a bull engulfing. just a little bit different. Sometimes they just don't see eye to eye, you know? Nice little pop to the upside here. Now the sellers have to go back down. If the sellers are going to take it, they have to push back down. Back underneath like the 10s on the Nasdaq. Looking for the Nasdaq to try to follow through to the downside. I like this area because the risk is relatively limited, all things considering, and this is a great structural spot on the S&P as well. So they kind of line up together, which definitely helps things out. The S&P, when I hit the entry, it immediately jumped down, but I didn't get a target fill, and now it hit, and then it slid right back up again, so... Welcome to the markets. Volatility is incredibly high, obviously. That last move to the downside may have been a break-even. I'll reduce my risk a little bit on the Nasdaq. I threw one extra one in there because I thought I was going to be able to grab a quick drop to the downside, but it didn't, so... The S&P is up in DP territory. My average is still in an okay place, depending on how this 5-minute bar closes, but... I would still prefer to have my S&P average in a much better place. Got about a minute left on this candle until we see how they want to close this out. Secondary zone of resistance on the S&P is at these high closes and swings. At this point, though, it slid a bit further than I really wanted it to, so, I mean, realistically, I'm looking more at just kind of getting out of it than anything else. Seems like it still wants to play some games, which is fine. The Nasdaq has incredibly way higher volatility, so as far as, like, risk adds go, I'm going to keep the gas pedal very limited in that zone. Market pulsing back in the opposite direction. Nasdaq reaching up to the POC. Now remember, from the bigger picture, this possible trap on the lows and the reversal back up is going to have a lot of shorts on the wrong side of things, myself included. But the important thing is maintaining a proper risk and just waiting for the appropriate time to find the next pullback in reverse. The Nasdaq with the climb to the upside, although we haven't broken above the POC and gotten above any of those other zones of interest. We do still have an area around, like the 27s on the pullback, which kind of sucks for me, but... For the Nasdaq, I've got to do some work on my average. My average is in a very bad place now, so it definitely requires a bit of work. As far as the average on the S&P, it's still in a moderate location. It should still be in a zone that's in striking distance of that scalp to just get out. As far as the Nasdaq goes, I've kept the risk relatively light because of the volatility, but the same mentality kind of persists here. Crude oil starting to get a little closer here. The bottom of the L2 is still around settlement. That's more of a zone of difficulty than anything else right now, but nice spot for a quick little encroachment on the highs for sellers on the Nasdaq. And that will allow on the next pullback when we get the dip to get an average and hopefully a slightly better spot as well. All right, so we have finally made it up to my normal size. Now we can start the actual building process. Like I said, I'm going to have to adjust my average a little bit on the S&P, especially now that they're encroaching into the highs. Hasn't quite made it there yet, though. Initial pop off the top. There they go. I was going to say, there's got to be more stops than that. The bull rally to the upside does have some juice to it, so that's why I'm not really hitting the gas pedal too aggressively yet. Nothing else is really moving. We're just getting a bit of that open volatility stuff. First 15 minutes is almost behind. $9.45 hits. Market pulsing a little bit further. Nasdaq is closing above the POC. Now we can flex a little bit in, a little bit out, and start jostling. Oops, let me get them in. If it starts encroaching like 8 contracts or so, then I'm going to start having to just eat some of the losses up front to get my average in a more beneficial place. But for right now, it's just squeezing higher, trying to freak people out. There are break points, though, of course. At the moment, realistically, looking at the bulls' targets on the last candle gap, we're right around that zone right now. But if they want to creep a little bit further on a wider extended gap target, then we've got 34.75 still. As far as the Nasdaq's concerned, the problem with the Nasdaq is the candles have just been massive. They haven't really allowed any gapping inside of here that, I mean, isn't measured off of a monstrous candle. So for the Nasdaq, it has candle gap objectives all the way up to its high at 24.50 at the moment. Of course, that's a developing gap. Next volume node on the Nasdaq, and notably one that really stands out from a pumping volume, is right there. 15, what price is that? 280. S&P's up at a new high. But I already know I have some work to do on my average on the S&P, so it's all good. The Nasdaq might have to make me work for my average as well. At the moment, they're squeezing. Typically when they have this kind of squeeze going, they're going to keep squeezing. It's not going to get better before it gets, well, not until after it gets worse first. These types of squeezes perpetuate more and more and more and more fear, and they get more and more and more aggressive. So that's why I said there has to be a certain break point where you either just cut it, take the losses, start exiting out again, modifying your average, or realistically just waiting before you add more. Right, if you're looking to build into a position. If it does pull back before then it's not normal. That usually doesn't happen when it's squeezing. So if it does pull back, then utilize that as an opportunity, right? But until then, the assumption is that this is going to continue squeezing for a while. So it's best to either just accept the fact that this is going to get worse before it gets better, and accept the fact that it's a loss. Or if you're building in, just don't look to build in for a minute. It's going to take a second. I doubt this grind up is going to stop anytime soon. Yeah, the good old Samsung in the background doing its duty. You know, I gotta say, I was a little skeptical about the, we've got the washer and dryer combo thing, but it's the one that doesn't have the center arm, what is it, auger, whatever it's called, in the middle, of the washer, and I was really skeptical that it wasn't going to work worth a crap. And man, it's really fun to watch. I catch my cat sitting in there on the, it's a glass top, it just sits there staring at it for hours. Nasdaq continuing its drive, pulsing through and closing above the 280s. So they still have more juice in the tank. We know that their objective is still above the highs. As far as the move on the S&P, obviously they've broken way above the top, and shorts are stuck in a really bad way. If they're managing it improperly, possibly account busting. And with the POC shift to the other side, waiting for the market to pull back in that zone where realistically a lot of traders who did get stuck and are managing it appropriately are waiting for the break-evens and the mitigated risks and all that fun stuff. We haven't had that pullback yet. And like I said, I doubt that's going to happen on this candle, right? This candle that's forming right now is probably not going to make it anywhere near my break-even. It's probably, like I've been saying, going to get worse before it gets better. You're much better off when the market's squeezing like this to just accept the fact that it didn't work. Unless you're building in. And then in which case, you're waiting. Which is what I'm doing. What I think is more likely to happen, and what I would like to try to do sooner than later, is to get my Nasdaq average up a bit further, because this next pullback is likely going to get snapped up incredibly aggressively by the bulls, knowing that the shorts are still heavily stuck. So what might end up having to happen is accepting and eating the loss up front to draw my average way up at the top, to buy the pullback on the next pull, to look for the continuation back to all-time highs, especially on the Nasdaq following through. The S&P, honestly, if I had to put anything on anything, it's more likely the S&P pulls back and goes sideways, or has a really much slower grind to the upside because it's already had its rally to the upside. The Nasdaq's got to wait for, it's got to play some catch up. Gold POC shifting down to 1754.8 and getting stuck and hung up with the L1 hovering just above it. If we can get the rotation to the downside on the Nasdaq where it ends up breaking down aggressively back lower and the S&P's already made a high, that would be a diverging top and much more likely that the S&P is going to come crashing down even harder. So, I mean, again, I'm not opposed to holding on to it by any means, but you just have to understand the risks of holding on to this type of trade where you are. I mean, I minimized it. Hang on. Okay. Okay, there we go. So as far as the upside, we are breaking through the larger 3-to-1 objective that we were talking about for the longs from before. That swing trade's already done. If it's still long, then you're in the L4s, and this is a very likely major zone of profitability anyway. But the next zone above that's going to be in the L5s. So 42 up to 55, and it doesn't invalidate until all the way up to the 82s. So when you're approaching this type of trade with that mentality, you've got to look at it and say, okay, I know that I've got all the way up until 82. Keep that in mind. Now, am I going to let it sit and do absolutely nothing until then? Of course not. But I really want to get my average a bit further up on both of them. Although, if the S&P does churn down aggressively, my average would basically be at the top of the day if it does go back down through the lows. So I'm not as upset about the average on the S&P, although given current price, I would like it a bit further up. The Nasdaq, it's in just a really bad spot. Yeah, exactly, and that's why, Stephen, I talk about these areas on different perspectives, because I know there's build-ins, I know there's scalpers, I know there's swings, there's hard stops, there's modified stops, there's a million different ways to manage each one. I try to cover the basics of all the different ways to try to make it a bit more straightforward, but that's why I talk about the risk so much. I barely ever talk about the reward. You'll almost never hear me talk about the reward. Hey, how's it going? Good morning, good morning. Nice little poke on the Nasdaq a bit further up. Still not pleased with where my average is, though. I'd like it to be a bit further up. If we do get a dip down sub some of these previous candles, it may even be an opportunity to exit some of them with the assumption that it's just going to keep going higher. Nothing else is really pulling back or doing anything else. Out a long time ago, now just watching? Yeah. It's poking its way up here a little bit. The Nasdaq, the S&P, like I said, I'm more inclined to leave my S&P average where it is if we're just to go collapsing down to, let's say, even back down to the POC. My average is still in an okay spot. But if the Nasdaq were to go back to the POC, I'm still negative. So it's like, I gotta modify my Nasdaq position just a bit. How do you control your nerves? Well, one of the big things is ensuring that your risk percentages are incredibly low. And again, you'll notice one thing that I'm always doing is talking about the risk and where the risk is and what the risk is at and how do I minimize my risk and how do I bring my risk down. It's always about the risk. That's why when I know what the risks are going into the trade, then I know what realistically I'm willing to potentially lose on the trade and what I'm willing to potentially make on the trade before I even get into it. So if it's gone like 20% against me when I'm expecting it to potentially even go all the way up into the 80s, like this is nothing. This still fits well within the tolerance of what this pattern could potentially end up being. It didn't go the way that I wanted it to on my initial entry, obviously, but trying to time a perfect entry point, I mean, you've seen that. When I try to do that, I don't get filled. So, like yesterday or the day before, where I got misfilled by like 3 ticks constantly. Trading sim or live? That's a question that I get a lot of, and actually I discussed that a lot in the FAQ as well. It doesn't matter what answer I give because I always want you to assume that it's sim. I don't care if you can see my account numbers, which sometimes I do accidentally flash up on the screen. That it happens. Welcome to life. But assume it's sim. If you can see my account number, assume it's sim. If you can see my address, assume that's sim. Assume it's all sim, because it doesn't matter what I'm doing on mine. What you are doing with your money is the important part. And I talk about that in my FAQ as well. Assume everything you see that is not your account is sim. I don't care if you know it's real. I don't care if I could show you an account statement. It doesn't matter. Assume it's fake. Assume it's sim. That's the only way that you can keep yourself realistic. It's as plain as that. People hate that answer, by the way. And a lot of people leave on that answer, which is totally fine. Those aren't the types of traders that I'm looking for. Those are the types of traders who are looking for the get rich quick, throw it into AMC and wait it, go up to $1 billion. I need realistic people, and it doesn't matter what I'm doing on my side. Obviously, it helps knowing that I'm trading with half my head screwed on, right? But it doesn't matter. Even if I show you account numbers, account statement, none of that matters. Assume it's sim. Always. If it's not your account, it's sim. That's how it goes. Going into 10 o'clock, top of the hour. There's nothing really else going on. I do understand the backing of the question, though. It is significantly easier to maintain your composure when it's fake money. I get the drive behind the question, but I always preface it with that. Because that's what it comes down to, right? But I totally understand where you're coming from. When you're trading on sim, it's fake. It's incredibly easy to control your emotions. One of the things that I like equating trading to in minimizing your risk is if you can get your risk to 0.5% on a trade. So as an example, 0.5% of a risk. Let's say you get into a trade on the micro Nasdaq that requires a 50 tick stop. Right, a 50 tick stop at 50 cents is $25. You divide that by 0.005, 0.5%. Your account size to take that trade should be $5,000 for one micro contract. Now, one micro contract with $5,000, like what? Like it's a $50 margin, $100 margin. Like really? Yeah, because that's how you minimize your emotions. If I take a 25 tick log, because remember, you take this and you categorize it based on ticks. We're not looking at our account value in dollars and cents. It's on ticks. That's how you make things even more easy to manage, right? So if you're risking a $5,000 account, don't look at it a $5,000 account. It's a 10,000 tick Nasdaq tick account, right? So if I have a 10,000 tick account and I chunk 25 ticks out of that, is that going to hurt my feelings? Am I going to feel any different? No. Not in the least. I mean, so when you disassociate from the dollar value and do those little tips and tricks like we talk about, like switching your account value into the ticks of the market that you're trading and minimizing your risk down to 0.5% and stuff like that, those things allow you to really control your nerves and help keep you calm and level-headed. Because one of the fastest ways that you're going to run into difficulty, blow your account up, end your career as a trader, the fastest way that you're going to do it is to build into a bad position and build into it way too aggressively. Right? You can take a bad position, and if you manage it properly, get out totally fine, possibly even profitably. Welcome to trading on this scale, right? But you can also take the best trade on the planet and totally slaughter it because you mismanage it. It has nothing to do with the trade or the execution. It's about the management. Right now, I know that I'm stuck in a squeeze. I have no business adding much to this while it's squeezing. Why would I? It's just going to get worse. Right? Why increase the risk by much unless I'm looking to maybe play a short-term bounce to bring my average up? You know, like it doesn't make any sense right now. Now we're achieving those major objectives on the Nasdaq. This is a much more logical location to potentially increase a bit. My average is now above the POC, so it does help me a little bit. But this way, at least, if we can start churning back down into the 80s, low 80s, I can exit a couple. That will draw my average up. It'll bounce again because the market's still going higher. Sell a few more at the highs. When it goes back down, exit a few more on the next pulse. It's going to take some time to manage the way out of this. It's not like an immediate in, immediate out, right? This type of management is going to be in, you get out of a little bit, goes back up, you add a little bit, get out a little bit, in a little bit, out a little bit. And if it ends up going in your favor, awesome. Then you'll have a whole stack of contracts along with it. But if it doesn't, you will have made it so that you have a situation where you've taken the initial loss, averaging out of these initial dips, right? Adding into the new highs, bringing your average up to the high, and then letting it sink back to the bottom again. And if it fails and it reverses back up, you will have mitigated the majority of it on these little pulses, so that when you are wrong, if that happens, you just have to wait for a small pullback and you're out. But this is, I mean, you can see this is going to take some time. This isn't like going to happen right now. So it's going to be a minute. We are going into 10:04, 10:05. So feel free to get those questions in, and I have to duck out. Obviously, I'm not going to be able to do much else on the S&P and the Nasdaq anyway, and my wife needs help in town. So that'll give this trade time to just kind of mess around and do its business. So as an example, if I were to just stand up and walk away right now, right, and leave, how would I manage it? That's one way that I always like looking at it, right? Where is my ultimate risk? Where am I just, okay, this is game over. I do not want this anymore. That's the type of situation that you have to approach it from. If I were just going to, like I was just talking about, if I wanted to get up and go into town and help my wife for an hour or two, because I know that this is going to take longer than an hour or two to get this thing to mess around anyway, then you would look at it from the bigger picture and say, all right, well, where are we? Right? Where can the market potentially go up to? Where does it go up to where I just do not want it anymore? Et cetera, et cetera. And realistically, looking at this, there's a very obvious next zone of interest coming into the L5. But if it starts breaking above the highs by much, I just don't want it anymore, right? We're breaking above the 80s. That's the break point. So if it makes it like all the way up there before actually pulling back to allow me any type of modification, which is incredibly unlikely, then I'll take the exit. And just eat the fat loss and call it a day. It doesn't feel good, but welcome to scalping. High probability, high risk. It's not fun, but again, the probability of that happening is like 1%. The market never goes straight in one direction. Almost never, at least. Never say never. Never say never. Yeah, and that's what I'm waiting for, Steven. So eventually traders will FOMO in, and the FOMO will be at the top. We know how that goes. You FOMO in, and it happens to be the high. So when people FOMO into the highs, that pullback is the one that I want to start averaging my way out of. The initial exits are going to be pretty heavy losses because they're going to be from my original entries. Remember, first in, first out. So taking that first entry and then exiting like up in the 90s, that's going to hurt first off. But the goal is to sell more when it goes, I mean, you know the goal, to kind of average, bring my position in a more favorable location now that we've got more info. So it's totally fine. Let them FOMO in. It might take a little while, but probably hours. But if the market were just to tank down straight down from here right this second, then realistically my entry versus the stop would be here. The scalp distance would be here. Oops. So, like, if I were to leave right now, that's what I would do. Just like, all right, there it is. Peace. All right. Like I said, I've got to duck out. My wife needs some help in town, and don't want to be late to help the wife. That's a really big problem. Obviously, today, I'm going to be in this one probably until tomorrow, or at least later tonight. If there are any changes or any updates, I'll talk about it in the chat room, of course. But otherwise, I'm going to duck out and just kind of let this play ball. If it does rotate straight to the downside, like I said, because, well, we can just do it right now. If this were to rotate straight to the downside right this second, then that would be the AOI. And if this were to rotate straight down at this very second, that would be the AOI. Right. Yeah, it's all good. We have a call later today anyway, so it should be all right. Anyway, I'll leave it at that for right now, but like I said, this could take possibly hours to eventually work itself out, but I'm still very much inclined to try to hold on for the downside. I love the downside move, but it just went a lot further than I wanted it to. Welcome to life. Now we have to manage. It's just part of it. That's going to do it, though. If I missed any questions, feel free to get those in the comments below. Or if you have a more detailed question, you can always shoot me an email, jhb@ssftg.com. Otherwise, though, enjoy the rest of the day. I hope you had a great trading morning, hopefully better than mine. I'm still stuck and waiting. Enjoy, rest up, and we will talk to you all tomorrow, all right? Have a good one. We'll talk to you all then. Thanks.